Hello traders, this is video number 8 and in this video I will teach you 3 basic principles which we are going to use in the future for our upcoming strategies. These principles are so simple and effective, yet nobody is paying focus on them, and if you focus on these principles only, I'm sure your winning percent will increase by at least 10 to 15%. So let's understand them one by one. So the first concept is about trend trading. So suppose if the price is somewhere around here, and if you are trading according to the probability, the chances of price going up are 50% and price going down are 50%, because there are only two ways the market can move. It can either go up or it can either go down, which means from the very start, you at least need to have a 50% win rate, because the price cannot go in any other direction except going up or going down. So if you know nothing about trading, at least we expect according to the probability that you will have a 50% win rate, but still people have a win rate of 10%, 20%, 30% sometimes, because they don't follow the basics. So suppose if the price is here, the chances of price going up are 50% and chances of going down are 50%. And if you are a trader, you can either go for a call trade or you can go for a trade in the downward direction, because there are 50% chances of you winning that trade. If you know nothing about trading, I'm just talking on the basic concept for a person who doesn't know anything about trading. So from the very beginning, you need to have a 50% win rate. But suppose if the price is moving like this in an uptrend, now tell me the chances of price going up and the chances of price going down, there will be a difference, because now you are watching a uptrend in action. So we can say that if we follow the trend, you will have at least 10% better chances of winning that trade if you follow the uptrend. Meaning, if you just place your trade for a call here, we expect that you will have at least 60% chances of winning, because this is an uptrend market and buyers are pushing in the upside direction. And there are 40% chances of you losing that trade, because the price can go in either direction. But if you follow the trend, you can certainly increase your chances of winning by 10%. Okay. Similarly, if the price is going down like this and the price is somewhere around here, if you go for a trade in the downward direction, the chances of you winning that trade will be at least 60%, because if you're following the trend of the market, you will have a better win rate than going totally against it, because the sellers are pushing. The sentiment of the sellers are strong here, they are aggressive and they are motivated to place more sell orders, and that's why the chances of price moving in the downward directions are high. And ultimately we can say that if we just follow the trend of the market, you can have a 60% win rate and you can lose 40% of the time if you know nothing about the market. Just if you know just that this is an uptrend or this is a downtrend, if you follow that, you will have a 60% win rate. To summarize it, if you follow the trend, you can have better chances of winning that trade rather than going against the trend. So that is one case. Now let's understand, suppose the price is here and you have a buying zone here. Now what do you expect? Do you expect the price going down and the price going up? The probability is same? For me, that's not the same probability, because if we have a buying zone here, which means buying orders, which means price can reverse from this zone. What does it tell you? It tells you that if the price reach this zone, you can expect at least the 60% chances of reversal and 40% chances of breakout. So ultimately what I'm saying, if you have a buying zone at the bottom and the price hit that zone, you can expect 60% chances of reversal and 40% chances of breakout. And I'm not talking in any trend sense. I'm not saying that this is an uptrend or this is a downtrend. I'm just saying if you have a buying zone in the bottom, then we can expect a reversal from the buying zone irrespective of the trend. So suppose if you just know about the buying and selling zone, by buying and selling zone, I mean support or resistance, supply or demand. So this is a zone where demand is high. The traders wants to buy at this zone, or you can say this is a support zone. So at the support zone, you can expect that the price will respect this zone, and the chances of you winning the trade are 60% and the chances of you losing the trade are 40%, which means if you follow a buying zone, the chances of price going up are 60% and the price going down are 40%. So if you have a buying zone and the price is at a buying zone, if you just place your trade based on the buying zone, and if you place a trade in the upward direction, your chances of winning are 60% here and the chances of you losing that trade are 40%, which means if you just know about buying and selling zone, if you trade with that without knowing anything about the market, you still can achieve 60% win rate. And similarly, if the price is here and you have a selling zone here, you can expect that the price will go down from this zone because this is a supply zone, a selling zone, a resistance zone, because the price at this price, the sellers are ready to place short trades because the buyers are not interested in taking the price in the upside direction. So all I'm saying is that if you follow a supply zone, a selling zone, the chances of you placing that trade in the downward direction and you winning that trade are 60%. I'm just increasing your win percent by 10%. So if you just follow a selling zone and if you place a trade in the downward direction, the chances of you winning that trade is around 60%. So we can say that if you follow a buying zone or a selling zone, you can have a 60% win rate if you know nothing about the market. Similarly, now suppose if the price is here, you don't know nothing about buying zone, you know nothing about the trend of the market, and suddenly you see that price moves like this, and after that you found this strong candle. This is a green candle. I'm not let me use it so that you guys don't get confused. So suppose the price was here, you found this red candle, and after that you found this pattern, or the price was here, you found that you have this candle, then you have this candle like this. I'm just drawing some strong pattern, this candle. Now just tell me, if you just know about the candlestick pattern, you know nothing about the trend, nothing about buying and selling zone, what do you think should happen in the price when you see these pattern? A trader, when they see these pattern, what they will think? They will think the price will go up. They will think that the price will go up. Who in this world will going to sell by watching this formation? By watching this formation, I think most of you will think that the price will go up and they should do the same, which means if you have strong candlestick pattern in your favor, you can certainly increase your chances of winning by at least 5%. Candlestick patterns like this or like this, the chances of you winning that trade if you place a trade in the upward directions are almost 55%, and the chances of you losing that trade are around 45%. Now, here is one more catch. Suppose the price was not here, and let me erase it. Suppose the price was here and you have this pattern formation. Now, if you look at the price, you know nothing about the trend, you know nothing about buying selling pressure, you just know about price action. According to me, this is a strong selling pressure, and even after watching this candle, I'm not convinced that the price will go up because the selling was very strong, and sometimes in that strong selling you can expect some buying, but in this case I'm not sure that if the price will reverse or not. So in this case we can say that if you go for a call trade here, the chances of you losing that trade are almost 50%, which means if the price action is against your candlestick pattern, then the candlestick pattern will fail. The price action will win. Similarly, if you have a candlestick formation like this, if you focus on this price action, it doesn't show proper dominations of sellers. We saw some buying, some buying, some buying, and here also buying, and there we have a strong candlestick pattern also. In this case, we can see that the chances of price reversing are still there, and if you follow that particular candle, the chances of you winning that trade are still better than 50% because the price action previously was not that strong. Now this is the second case. Now let's talk about the third case. Now if you look at this price action, what can you say? You can say that this is not a strong selling price action. You can expect that the price can reverse, which means if the price action is not moving aggressively, you can expect a reversal if you have strong candlestick pattern. So if you want to take a reversal trade and the price moves like this, and you saw this candle, if you place a trade for a call trade here, the chances of you losing are around 50% because you only have this candlestick pattern. But suppose if the price doesn't move like this, if the price was moving like this, now you can say that the chances of you taking that trade and winning that trade are approximately higher than 50%. But here is the case. Suppose this is a uptrend chart. This is the retracement phase. Now you have this candlestick pattern. What do you think? The chances of you winning that trade are high or not? Well, according to me, if you are following the trend, you have 10% chances of winning that trade. If you follow that candle pattern, you have 5% more. And if you follow a weak price action, you can certainly increase it by 5% because you saw that the selling pressure is not high, which means this retracement will going to get over and you can expect buying, which means if you follow the trend, if you follow price action and candlestick pattern, you will have a 70% win rate at least. But suppose now you see that there is a buying zone actually. Now once you have a buying zone, it is also pushing the price in the upside direction because the buyers are waiting. So ultimately, if the trend is uptrend, the price was retracing back weakly, not strongly. It was weak retracement. Price hit a strong buying zone, a strong support zone or a demand zone, and you found this pattern. Now tell me what will be your chances of winning that trade if you place a call trade. For me, this buying zone adding win percentage to your trade, this trend is adding win percentage, this weak price action is adding, and this strong candlestick pattern all together are giving you a signal that the chances of you winning that trade are high. And that's why if you combine all these factors together, the chances of you winning a trade will be higher. If you follow the trend, trade with the trend, you will have 60% chances of winning. If you have a buying zone, if you follow that in a uptrend, you can have a 70% chances of winning. If you saw price moving slowly in the retracement phase and as soon as it hit a buying zone, you see a strong candlestick pattern, it also adds a 10% in your win rate, which means if you follow these three factors completely, you can have at least 80% win rate. This is a very simple thing, yet nobody is focusing on them because what you are doing, either you are following the candlestick pattern, either you are following a buying or selling zone, either you are following the trend, either you are following the price action. But if you combine all of this, you will have better chances of winning. And I use the same concept when I take retracement reversal trade. I have made plenty of videos on that concept previously, and on the upcoming strategy videos you will have those strategies. But this is a very simple concept. If you apply it correctly, you can certainly increase your chances of winning. So what I want to tell you here is that whenever you are trading, make sure you follow the trend. Either it's an uptrend or a downtrend. You will not go against the trend no matter what. If the trend is uptrend, you will take trades in the direction of the trend. If the trend is downtrend, you will take trade in the direction of the trend. Secondly, you will focus on the buying and selling zone. If you are taking trades in the upward direction, try to use buying zone, not selling zone, to take reversal. Because once you take reversal, what you will have, suppose the price is moving like this in an uptrend, you have this selling zone here, okay, and you also got a reversal pattern here. But if you place a trade in the downward direction, the chances of you losing increases. Why? Because the trend is now in against of your trade, which means it certainly will affect 10% chances of you winning that trade, which means if the trend is giving you 60% win rate, following a selling zone here will cancel that, because the selling pressure increases your chances by 10%. But on the other hand, you have a trend which is against you, which means now you have two things which are totally against each other and they are not working in the same direction. If you follow the candlestick pattern also, but still I'm not sure if you have a strong win rate here, because you are going against the trend. Although you will have winning trades, but going against the trend is not a good thing. It will take time to assess the price action and understanding the trend, then you can go against the trend. But if you are a beginner, I will advise you to follow the trend all the time. Follow the buying zone if you are taking trades in the upside direction. Let me clear it. So if you are a beginner and you see that the price action is like this, I advise you to always take trades in the upside direction. Second, use buying zone, support zone from the bottom to take reversal trade in the direction of the trend. Use strong candlestick pattern to take reversal trade. Read price action correctly, because if you have weak price action like this in the retracement phase, you can expect a reversal. But if you have strong retracement phase like this, you can have a breakout. So you need to wait for the price action to get weaker, hit a buying zone, give a strong candlestick confirmation, and then you will trade in the direction of the trend. Then you will have a winning percent which is higher than your average. So here is the concept. Now let's understand, because now you don't know if the trend is uptrend or not. So now I will teach you how to spot a trend correctly in a running market. So suppose if the price is going like this, one thing is very basic. When the price moves in an uptrend, it starts from the bottom. This is the low, this is the high, this is higher low, this is higher high, higher low, and higher high. Now this is called higher low and this is called higher high. And why this is called higher high? Because this particular high is higher than the previous high, and that's why this is called higher high. Similarly, this particular low is higher than the previous low, that's why it's called higher low. So in an uptrend, you will find price moving in the upward direction by creating higher highs, then higher lows, then higher highs. Okay, so that's how the price action move. It creates higher highs and higher lows. Similarly, in a downtrend, the price moves like this. This is the high, then it goes to the low, then this is lower high, this is lower low, this is lower high, this is lower low. This is called lower high because this was the high, and this high was formed lower than the previous high. That's why it's called lower high. This is low, and this is called lower low because this particular low is lower than the previous low. That's why it's called lower low. This again is called lower high because the previous high was here. This was formed below, and that's why it's called lower low. Now let's understand how to spot a trend reversal, because sometimes what you will find that price moving like this, and suddenly price starts moving like this, and you don't know what is the trend of the current market. So first of all, let's understand a very basic thing. Whenever you see that price creating higher high in an uptrend, you will always find break of structure. This break of structure concept I have already taught you. In this video, you will learn about the change of character. So what is change of character? Suppose the price is going up by creating new higher highs and higher low and giving break of structure like this. Here you have a break of structure. Here you have a break of structure because the previous break, the previous structure was here. This was the reversal point, and now you have a break, and that's why it's called break of structure. Now suppose after that you find that price moves down and breaks the previous higher low swing. This higher low swing break is called change of character. Why this is called change of character? This is called change of character because previously the character was uptrend. Now, because price failed to reverse from a higher point, it broke the previous higher low, it broke the previous low point, and it created a new low here, which means selling pressure is high, buying pressure is low, and that's why the price failed to reverse from a higher point or at the very last low point, and it created a new low. And you know that when price moves in the downward direction, it creates lower lows, then lower highs, then lower lows. So this is the new low formation, and this is called change of character. So let me clear it one more time. So this is an uptrend market, price creating higher highs, then higher lows, higher highs, higher lows, higher highs. Suddenly price goes down, breaks the previous higher low, create a new low. This is called change of character because now the price is showing selling strength, and you can expect a reversal in this case. But we all know that if the price is moving in an uptrend, it needs to break the previous high to continue its trend. Similarly, when you have a new low formation here, if you just focus on this part and not on the previous part here, what do you see? Just focus here, and if you have a reversal like this and suddenly you have a break, this is called break of structure. But look carefully, this is the high, this is low, this is lower high, and this is lower low. What is lower low means? It means a downtrend market. So once you have a change of character, when price breaks the previous higher low in an uptrend, you can expect price reversing and forming a downtrend structure. So this this change of character is the initial sign of trend reversal until and unless the price is breaking in the upside direction and not breaking in the downward direction, the previous low in an uptrend. You will say this is an uptrend market. If the price breaks the previous low, then this is not a uptrend market anymore, and you can expect a trend reversal because the initial sign are appearing on the chart because we have a change of character. So when price breaks the previous high in an uptrend, this is called break of structure. When price breaks the previous low, this is called change of character. I'm not talking about previous lows. The last low is the most important. Once you have the last low breakout, this is called change of character. From here, the price can go up, giving it a fake out, and it can go down, giving you a break of structure again. On both the cases, you have to understand one thing, that change of character is not the confirmation. This is the initial sign that price can reverse. So once you have a change of character, you will stop treating this trend as an uptrend until and unless price reverse and breaks the previous high. If price breaks the previous high, you will take this as an uptrend again. But if the price failed to break the previous high, then you will wait, you will not do anything, because currently the trend is not uptrend and we can expect a reversal or a breakout in either direction. So that is the case. Now similarly, in a downtrend market, when price moves like this, creating lower lows, lower high, lower low, and it is giving you a break of structure here, which means that this trend is downtrend here, but suddenly you see that price breaking the previous last high here. This is lower high. This is called change of character, and once you have change of character, you will stop treating this particular trend as a downtrend. Now you will look for either a break of structure here to trade in the newly formed uptrend, or you will wait until the price breaks this zone, break this previous low, to confirm that this is still a downtrend market. So that is the simple concept which you are going to use. So let me summarize it one more time. If you have a price action in which you find price creating higher highs then higher lows, higher highs then higher low, this is a pure uptrend market. But suddenly after some time you find price breaks the previous low, this is called change of character, and you will stop treating this zone as an uptrend. You will start waiting for a confirmation. If you have a break of structure here, this is a downtrend. If you have a reversal and if you have a break of structure here, this is an uptrend. In this middle portion, this is not a trendy market. You will wait for a confirmation either from a break from above or break below. Then only you will treat this as a trend in either direction. So if you have a break above, this is still a uptrend. If you have a break below, this is a downtrend. That's how you can spot a uptrend or a downtrend, or you can spot if the trend is changing or not. Now you understand about how to spot a trend and what is change of character. It's time to teach you a very important concept, which is how to spot the exact higher low swing or higher high swing to get a change of character. So suppose the price is going like this and it's giving you a break of structure, confirming that the price is moving in an uptrend. But the most important thing which you have to notice here is that until and unless the price reaches the previous high or breaks it, you will not treat this as your higher low swing. Meaning, if suppose price is moving like this, it creates higher high. Once you have the price reaching the same high and it's breaking, you will take this as your higher low swing, and then if the price reverses, then you will say that this is your change of character. But suppose the price reverses like this, it doesn't reach the previous high and it reverses here like this, and then here you have a break. This is not your change of character, because the price failed to reach the previous high or it failed to break above. You need at least price reaching the previous high to consider this as your higher low swing. And if the price failed to reach that zone or level, then you will not treat the previous low as the higher low swing in an uptrend. This will be your higher low swing, and until and unless you have a break here, you will say that this is your change of character. So you need a break from here. So let me summarize it one more time so that you guys don't get confused. Suppose this is the high, higher low, higher high, higher low, higher high, and higher low will not say that this is higher low until the price breaks above or reach the same high. Once price reach the same high, we'll say this is your higher low. And after that, suppose the price goes like this, it breaks again. This is again your higher low swing. But if the price goes like this and the price failed to reach the previous high and it reverses like this, goes up and it gave you a break here, this is not your higher low swing and this is not your change of character. This is your higher low swing and you need break here only to confirm this as a change of character. So I hope you understand the concept. Let me teach you for a downtrend now. So this is your downtrend market. Price is creating lower lows, lower highs, then lower lows. So this is your lower high because the price was able to break this, or at least if the price able to reach that level, you will say this is your lower high swing. And if you have a break, this is your change of character. But suppose if the price failed to reach the previous low and it reverses like this and you have a break here, this is not your change of character. You need break here. This is your change of character, and once you have a change of character, then you will look for a break of structure to confirm that this is now an uptrend, or you can wait for a reversal again, and until and unless the price break this previous low, you will not treat this as a downtrend. Once the price break the previous low, this is now again a downtrend market. So now you understand the concept. It's time to apply the learning in a real chart. So this is an uptrend market. As you can see, the price is creating higher highs, then higher low, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher high. This is higher high and this is your higher low because the price successfully break this level. So now if you can see, the price moves like this and here it failed to even reach the previous high, which means this is not your higher low, this is your higher low still, and you are waiting for a breakout here, then only you will take this as a change of character. So this is not your higher low, this is your higher low, you need break here, this is your change of character, and this is not your change of character. Now let's check what happens in the future. The price goes down. We have here, this was the higher low swing, and we have this break. This is our change of character. Now what we need? We either need, as this is a retracement, we need break here. Then we will say that this is now a downtrend market, or we will wait for the price to go up and break the previous high to take this as an uptrend. I'm just talking about in the perspective of an uptrend or a downtrend. Right now, we have initial confirmation because we have change of character, which means the price can reverse in the downward direction. Price was moving like this. This was the lower low. Price goes up. It reached the previous low. Now, as it reached the previous low, this is now your lower high, which means if you have a break here, this is called change of character. So we have a change of character here. Now the price reverses. This is your break of structure, and now this is an uptrend market. So I hope you understand the concept that if the price failed to reach the previous high, then we'll not treat this as a previous low swing. This is not a higher low swing, but in this case, we will treat this as a lower high swing. Why? Because the price was able to reach the previous low, and that's why this is called change of character, and this is not your change of character. So that's how you can spot a uptrend and a downtrend market. Now let's understand how you can spot strong supply and demand zone, or you can say a strong buying or selling zone. So if you see this chart, you are watching this chart, what do you see? According to me, this is a strong level, this is a strong level, this is a strong level, and this is also a strong level. We can say it's a level, but I'm not taking this as a strong level, but ultimately this holds value and that's why there is a reversal. But if you compare, then you can say that those levels which are clearly visible like this, and like this can be treated as a strong buying zone here. And these levels are not that strong. They can reverse the market, but they are not that strong. Similarly, this is a good level, this is also a good level, this is also a good level, and here this is also a good level, and this is also a good level because they are clearly visible. You can see previously market respected this zone, which means this was a selling zone after the breakout. Now this is a buying zone. Price here also respected this zone. So ultimately the levels which are clearly visible must be treated as a strong buying and selling zone. Now this is a different kind of strong zone. Why? Because you will see strong reversal as soon as price hit. Similarly, strong reversal as soon as price hit those zone. So there are, according to me, three kinds of strong levels. First, when you find swing highs and swing low, like in this case, this is the swing lows. So they should be treated as a strong zone. These are swing highs, so they needs to be treated as a strong zone. The other types are extreme levels. Extreme levels are those levels which are formed and after that the price failed to reach that high for a very long time. In this case, this is a strong selling zone. This is a strong buying zone because the price was not able to reach that level for a very long time. So you can treat these levels as a strong zone. And the last ones are the levels which gave strong reversals, like here. This is a strong reversal. Market reverses very sharply. Similarly, strong reversal, strong selling zone. Strong reversal, strong selling zone. Strong reversal, strong buying zone. But I'm not saying that you will use these levels to take trades without thinking about other factors. There are other factors like following the trend, price action, candlestick pattern, the strength of buy and sellers, and how many times a level have been used. Because if a level have been used so many times, you will see that it's getting weaker. I have taught you this concept, so I think I don't have to teach you again, because once a level is used, the chances of reversal decreases because the number of pending orders and new entries decreases with time. So all in all, what I'm telling you here is that if you want to take trades, use strongest level, try to follow the trend, try to focus on the price action, and try to trade with the candlestick confirmation. So now I have taught you about the trend trading, buying and selling pressure, about candlestick pattern, price action, whether it's weak or strong, change of character, how to spot trend, and how to spot a trend reversal. Let me summarize it one more time. If you follow the trend to take trades in the direction of the trend, you will increase your chances of winning by 10%. If you follow a buying or selling zone, then you will increase your winning chances by 10%. If you follow a candlestick pattern also, you will increase your winning by 5%. And if you follow the price action, you can increase your win percentage by at least 5% more. And if you combine all these four factors together, you can have a winning strategy that can give you a 75 to 80% win rate easily. And in the upcoming time, I will give you strategies that will be based upon these four factors when we will use all these factors together to take trades. And I use them by myself. Lastly, I taught you what is change of character, and then I taught you how to spot a trend correctly and how to spot a trend reversal, because if you don't know what is the current trend of the market, you can't follow it. So I have taught you that also. So that is it for today. The next video will cover the strategy based upon these principles. So I hope you guys will watch these videos carefully, and if you guys have any doubt, let me know. I'll try to help you because I'm here to solve all your doubts. So with this note, let's end this video and we'll see you in the next video very soon.